Welcome to the blog 2 Investing in Common Stocks. We are covering today the topic 2, basic characteristics of the common stocks. Within these topics, we will talk about the basic features of the stocks, including the characteristics of issues. We will talk about the stock quotations and transaction costs, as much as the 4 different kinds of values of common stocks. Common stock is an equity capital. It is on the balance sheet seen on the right side. In the equity, it represents the equity of the company, and that's why it's called also very often an equity securities. Now, let's have a look how common stocks shown as this corporate security. We will talk about buying and selling stocks and the stock's values. Before a stock is traded on the market, there needs a private company to be transformed into a corporation. Corporations which is able to offer stocks on the market. Private held companies like limited partnerships, for example, are not able to issue stocks, though they need to be transferred into corporations. If I transfer a company into a corporation, then it comes to the first time of offering shares, and that's what we call the public offering. Very often you also hear IPO, the initial public offering. That means that the first time the stocks will be offered on the market, mainly the stock exchanges in form of New York Stock Exchange, London, or Frankfurt Stock Exchange. If the company is already on the market, traded, then it can offer rights or additional shares. Additional shares means when we need more money for growth or we need more money because we have too much debt, then we can offer more shares on the market. Then we offer rights to the existing owners and offering new shares to purchase, and that raises equity as well. Both types, public offering as well as the rights offering, increases the equity of the company in the balance sheet. Now we have different classifications what the shares being traded on the market are. They are differentiated by the different voting rights or by the different dividend rights. Normally, the different dividend rights will be shown in preferred stocks, which we will talk about later in the fixed income securities. What the different voting rights concerns, there are Class A and Class B shares. The Class A shares normally have 1 voting right, and the Class B shares have, for example, 10 voting rights. The idea about the 2 classification is that the owners or founders of a company are keeping the Class B shares, though they're keeping the power over the company, and they need less shares to have the power, meaning the voting rights, compared to these which are just interested in the capital gain or the dividends of the shares. And so we see that the Facebook, for example, Mr. Zuckerberg as a CEO, he holds Class B shares, though he has a relatively small number compared to the outstanding Class A shares, but with each share he has 10 voting rights. When we come to the reading of quotes, the stocks appears normally on the daily financial press. For example, in Bloomberg, in the Financial Times, in the Wall Street Journal, in Reuters, and as much also here on Yahoo Finance. With the quotes, we can see a couple informations which we will talk about now. So here we see a quote from Finance of Yahoo from the company Netflix. As you can see, the company is currently traded with $658.29. And this is an increase from November 23rd to November 24th of $4.23. What we can also see is that it is traded on the Nasdaq. So it's a computerized stock market. And the quotation is in US dollar. Now that what you see on the picture is a typical stock quote. The most important information which we see certainly is the current price, but also the previous price from the day before. That's here was $654. Very important, the bid and the ask of a quotation. The bid is the demander side, also the purchaser side. The ask side is the seller side. When we see here that the purchasers, the bid side, are willing to pay $658 for the stocks, we see that the sellers are willing to sell the stock for $659. Though at the moment there will be probably no trade due to the fact that the purchasers are offering less than the sellers are looking for. Unless I will enter an offer or a trade that I say, I don't care how much I want to pay, I want to buy 100 Netflix. If I put this order into the system, then I will be executed with the seller price, the $659.20. If I want to sell my Netflix shares and I don't care about the price, then I will be executed with the $658. We see the volume which is traded on the market. So that's current volume on the day, the average volume over the last months which is traded on the market. A very important information is seen here with the market capitalization. The market capitalization being the number of shares times the outstanding numbers. The number of shares times the price. Well, 658 times the number of outstanding shares. So what we can see here is that Netflix currently is worth $259 billion, 591 million. This is quite a very expensive company. Besides other informations, we see the earnings per share. So we see that the company is profitable, and we see information about the dividends. Here we see that the company is not offering any dividends, it's not paying dividends. On the same side, we see also then here the chart of the company. And we see that Netflix over the last 5 years had a quite nice appreciation, and apparently that had been a good investment for the investors. Now let's come to the buying and selling stock, meaning the transaction cost. As we have seen, we have the bid and the ask. The bid, the demander side, the purchaser side, the ask, the seller side. So when I always trading stocks, we know that if we sell or buy shares, we have transaction costs involved. In the United States, we're making the differentiations between the round lot and the odd lot. In general, the round lots are 100 shares and a multiple of that, 200 shares, 300 and 400 shares. The odd lot is then anything which is less than 100 shares, so 450 shares or 50 shares or 420 shares or something like this. The transaction costs which are paid to the brokers, to the stock markets, can be something between 1%, 2%, but due to the digitalization, computerization, they're probably being lower nowadays. It also depends whether I need consulting from the broker or I put the information just through the system of the broker. For that, the transaction cost can be as low as 0.1% when I just put the trade over the system and the broker doesn't have to do anything, no consulting, but it could be up to 2% if there is an intensive consulting from the broker. Another thing which makes a transaction more costly is if I enter a small order. If I'm buying only 1,000, 2,000 worth of stocks, I certainly have much higher transaction cost relative to the amount which I pay compared to 50,000, 60,000 volume of a stock. If I purchase stocks which are relatively seldom traded, the spread between bid and ask is relatively big. Although that can lead to high cost, because when I purchase it and I want to sell it relatively fast again, then I can lose 3-4% due to the fact that the spread is relatively big. Good. Let's talk about the different values which we have on the stock market. Beginning with the par value. The par value at the end is an arbitrary value amount which is seen only in the balance sheet. At the end, it is a lowest minimum value of the share, and it is basically reflecting a voting right most of the time. More important for the investors is then the book value. The book value is nothing else than the stockholder equity on the balance sheet, asset minus liability. And if we want to have the book value per share, we take the stockholder equity and divide this by the outstanding numbers of shares. So for that, we need at the end the financial statement, at least the balance sheet, to see how much the book value of the company is. In comparison with the book value, we have then the market value. The market value is that what we see on the quotation system. That's basically the current price. And multiplying the current price with the numbers of outstanding shares, we come then to the market capitalization. The difference between the market value and the book value is that book value comes from the past because it's balance sheet, and the balance sheet is a financial statement, and that being done by the past. While the market value is more future-oriented, forward-looking, because that what the investors are paying on the market is the future prospect of the company, and that's certainly that's why they're willing to pay the price for it. Important is when the market value, although the current price is lower than the book price, that could be then an information that the company is financially distressed. The most important value, nevertheless, is the fair value. A market value is that what the company is traded currently on the price. But nobody knows whether this price is correct. We can say the company is overvalued or undervalued. That's depending what we consider the fair value is. So when we go into the valuation of a company and want to buy the shares, first we have to think about whether the market price is a correct price, is a fair price. And for this, we are valuing the companies and trying to find out what the fair value is. Taking the example with Netflix, the stock was trading with 658 on the market. If we consider by our valuation that the price or the fair value is 650, then we would consider the stock to be overvalued, meaning it's traded with with higher price than these which we think of the fair value, and then we might not purchase it. If we think that the fair value of the company is 700 and we see it's traded with roughly 660, then we consider the company be undervalued, and then it might be a good bargain to purchase the stock. Good. So we discussed now the different features, characteristics, and the informations given from the stock quotation and the transaction cost. As much you should know a little bit now the difference between the par value, the lowest possible value, the book value, the market value, the price in the market, and the fair value. Thank you for listening.